Hey everyone, on today's video, we're going to dive in on looking for a multifamily property here in Orange County. Now we have an exclusive 1031 exchange buyer that has an agreement with us to locate them a total of a $20 million purchase requirement for multifamily properties. Now what we're gonna do, that can be a breakup of multiple smaller buildings or one single asset. So we're just gonna dive through and show a little bit of the process of what we do on the front end on locating a suitable property. So the first thing I'm going to do is I'm just going to pull up LoopNet for this illustration. We have our internal listings. We have on multifamilysocal.com. We have our off-market properties that we have relationships with where people have said, hey, look, we'd sell. But for the illustrations of this video, we're going to do LoopNet and we're going to pop in and just go over some top line kind of vetting of properties to see what jumps out at me. Now, everybody's requirements are going to be different. What we're really looking for is good long-term assets, good assets we don't have to really put a lot of capital into. That's going to be something that we're looking for. So good location, good product, and not too capital intensive. So let's dive in. So I'm over here on LoopNet. I've already got a saved search. There's 75 results. I'm going to kind of go through, I don't need to go through one by one and bore everybody, but I already know pretty much every property. I've walked a lot of these buildings just being in the business, and know if either it's being flipped or if it's on a tough street or whatnot. There's challenges with it. The first one that I'm going to dive in just because it's coming up here in order is this Tropicana Apartments. This is actually a building that our team has listed. And what I really like about this is the location. Location, location, location. You can't really beat it. It's a great size asset, 21 units, a couple blocks from the beach. It's been in the family for 40, 50 plus years. I've already got the OM here on it. And this is an OM that we created on the property. Let's dive in. This price was higher. It was listed higher in the 9s, but given that interest rates have run up and they're now touching close to 7%, the pricing on these coastal assets can be challenging sometimes because the cap rates are so low. But this is a great little asset. One of the good things outside of the location and the size is that this is going to take up majority of the capital, almost half of the 1031 exchange requirement from this buyer that we're working with. It's got a great walk score, a lot of things that you can't really fix, like the location, the proximity to walking distance to the beach and retail. Those are all great things. Now, this property was an older hotel at one point, and it's now been converted into an apartment building. So it kind of has some of the hotel vibes to it, which is a challenge that is not easily fixable. So that's one of the downsides to the property. Every property isn't perfect. I mean, that's one of the things you have to realize as an exchange buyer or as a broker. There's really no perfect property. If it is, it's probably gone in 2 seconds, or you're really gonna pay up for it, right? So most of the time, nothing's perfect. But this is a good asset, a great asset to step into and hold long term. And this is what this client's looking to do. So let's dive into the numbers. Change this here. Okay, so the asking price is $8.5 million. Really, we need to look at what kind of financing we can get. At the time of the package was made just a week ago. Rate was at 6.25. Now we're at 6.8. So this thing's going to adjust and cut into the LTV. As you can see, the cap rate right here on a stabilized level is 4.25, and the going in is 3.5. The price per foot is going to be high at $842 a foot, but that's okay. If you can get the yield to work and the location to work, I don't mind a big per foot. And also that's skewed because it's smaller units. All right, so let's dive in on the unit mix. You got 17 one-bedroom, one-bath units. I did tour them. They're a little on the small side, but they'll definitely work for this type of location. 431 square feet each. They are one beds. We did confirm that. However, they kind of feel a little bit like studios, given that size. But if you were to level the rents off and get them up to $2,100 a month, you've got a 2-bedroom and a 2-bedroom, 2-bath. These are all very realistic pro forma rents. You might even be able to outperform these, especially within this location and the demand. We're going to back it up, and we're going to see this get to this 4.25 cap based on the asking price. We've ran 38% expenses. This is adjusting predominantly for new taxes. Insurance is a big thing. We can't just use the old policy. We've got to go out and get a new insurance quote on every property we look at because premiums are going up, and then also new policies are challenging. So that's going to be a big thing we need to price in for the buyer. But then we're going to go through and use all the actuals that we have on the property that have been annualized. So 35 to 40% operating expenses makes sense. That's fine. So we know this is like a true 3.5 cap. Somewhere in the, there's probably got to be some flex on the price to make it work given the, given this buyer's exchange requirement. But this is definitely something that I'm going to show to them given the location. And we're really going to see, look, to have this type of location, you're going to have to give up a little bit of yield. Right? If yield is more important to you, then you might have to give up a little bit on location. But this is definitely something that we're going to show to them. All right. So the next property that I did see that I really like here is going to be, there's actually two. It's the same seller. We've got the Roberts property right here, and then also this 302 Batavia. So let's dive in on Roberts first. This is the same seller. I believe the heirs just inherited the properties, and somebody passed away. There's probably a stepped up basis and they want to sell. Properties have been within the ownership for some time. As you can see right here, available for the first time in decades. We know this location in Anaheim, 920, 926 South Roberts. That's off the cross streets of Ball and Euclid. It's a bread and butter type market. Rents are always pretty stable, occupancy is very stable, but it's more of the kind of a workforce housing type product. You can see here, this is a corner lot, 2 side-by-side, 8-unit buildings. I believe these are all 1-bedroom, 1-bath units, but I mean, the property looks good, right? You've got a good, decent little curb appeal. I don't know about the green. You might want to maybe change that color out, but if it doesn't need paint, I don't know if we need to rush in and do it. You can always change up the trim color or something. You got the railings here, so they got that kind of update they did on the railings, probably to pass through insurance, so that we would need to recommend doing those. You can see these are the older stairs, probably older windows. I can see the aluminum there through the photos. So you could definitely go in and fix this up. And shout out to my buddy Tim Carr here, who's got the listing. Good buddy. We worked and done deals together in the past, so great working with Tim. Let's see here. Let's dive in on Robert. So we already sized this asset and put it on our one-pager, right? So this is the asking price, $3,749,000. I'm just going to double check that. Sorry, I'm bouncing around here. $3,749,000, $234,000 a door. Now I've already I went by the asset. I already know it, but I went by the asset, put a set of eyes on it recently, and the area is about the same. It's not really an area that's like getting a whole lot worse. It's not really an area that's getting a whole lot better. It's just kind of like steady Eddie. You know, I've been selling apartment buildings in Anaheim for almost 15 years, and it's about the same as it was 15 years ago, and maybe in the next 15 years it'll be about the same. So it's not going to be like a big change, most likely, in the market. But it could be a durable cash flow property. So when we go to look at the numbers here, just at the asking price, $234,000 a unit, $374 a foot. Look at this cap rate, under 3%. Hey, that's tough. Especially if you're looking to get financing. I mean, you probably are only going to be able to get a 30% LTV on this. And look at that 6.8% interest rate. With IO, if you put 70% down, your net cash flow is like 1%. It's tough. So this is probably either going to be a cash deal or a private money bridge type financing deal to where you can get a little bit higher leverage, go in and improve the rents, and then stabilize it and then put some permanent financing on that. So we just plugged in $1,900 for the rents. I think you could probably over improve that, but again, we don't want to like shoot for the best case scenario, especially in a little bit of a transitioning market. We're just sizing this deal. We're stress testing it at $1,900. Getting all the rents at $1,900, that's really just leveling their rent roll. So if you do $1,900 a month, you can get the rents to $30,400. The in-place rents are $17,765, right? So what is that in a percent? It's a 70% increase in rents. So you can't do that with a max allowable rent increase of 8.8%, right? But on a turnover, we can go to market. So we're not gonna be able to get this all at once. You could notice some tenants to vacate, transition some units, work through the business plan to get it to market. But look at the pro forma cap rate. You're at 6.5. So there's a path close to positive leverage. I mean, there's not a lot of properties out there where I'm seeing a lot of stabilized 6.5 caps. So let's play around with the price. So if we took this price down, it's been on the market. I think it was under contract. It blew out. It's now on the market. It's available. I don't know where it can be delivered. We would have to make an offer, but I'd probably look at it around $3.5 million. You're at $218,000 a door, $350 a foot. The cap rate, no matter what the price is going to be tough going in. I mean, it's 3 cap. So you just gotta know that you're not buying it on the current cash flow. Pro forma is going to be over a 7. I think that's a good little basis. That's a good little basis. The thing about this is you just got kind of motel style, all ones, kind of just bread and butter units. A lot of people made a lot of money over that. You get a lot of units for the price of $3.5 million potentially. But it's just, the product is what it is. So I think you gotta think about that. Is if rates go up higher, the 1 bedroom, 1 bath, this type of product's going to soften probably the fastest, right? Studios, ones, things like that. So that's something that you might want to be mindful of. We could see further softening in this value. I mean, just a few months ago, this would have been, or maybe earlier this year, this would have been a $240 a door, $250 a door deal. In the height of the market, I mean, this could have even fetched much higher than that, $275, $285 a door. The cap rate would be goofy, but again, the cost of debt was half of what it was now. So I still like this deal. It depends on the direction of what the client wants to look at, right? We got a beach property, better location, and we've got this, and it's really more pure cash flow and getting it at a great little basis compared to where we were from the peak. All right, so those are 2, and then moving on, the same seller has another property that we really like. And this could be a hybrid of the 2 that we just went over. This is 8 units on Batavia in Orange, 302 North Batavia. 8 units, all single story, little bungalow, cottage style property. I love this property. I think it's actually under contract, so, or going under contract as we shoot this video. So I think this one might be something we have to track to see if it falls out. If it falls out, then we'll re-engage. But nonetheless, I really want to highlight this one because I went by the property. Orange is a great market. Orange is a great rental market. It's again that kind of that hybrid between, your coastal and then your bread and butter workforce housing. You kind of get somewhere in the middle where the renewal rates are a lot stickier with tenants. You've got a great city. You got great schools. This isn't too far from Chapman actually. You've got good product. You're surrounded by single family homes in this location. So there's a lot of good things that you can't fix around the property. They're already working in your favor. And that's really going to give you the lift to probably get good rents, good tenants, and probably good long-term appreciation. So let's dive in on this one. He's got a little OM here. Let's pull this thing up and see what Tim's got going on. All right, so I did go over and put eyes on this property as well. From the package, Tim did a good job with the package, with the shots, but it is older product. It's 52 product, 1952. So what does that mean? Well, we really got to go in and see what we got with the actual CapEx needs, right? The roof looked like it was in okay shape. The property looked decent shape. It was just tired, a little bit older generation. I don't know what the interiors look like, but that's definitely something that we need to take a look at because the CapEx spend might be a lot higher. So the 436 a door, that's a big number, right? The seller's going for it. They're asking for a big number. Can't blame them. They're all 2 bedroom, 1 bath, single story units. All right, so let's dive in. So you got your approximate square footage of 6642 divided by 830 square feet each. I really like that. The square foot of the lot, corner lot, almost a half acre. You got individually meters for gas and electric, so that's great. Maybe there's a way to put washer dryer hookups in these units. That's one thing that we'd really want to see with that cottage style. If there's any way to add AC, mini splits, or washer dryer hookups, that would create a lot of value in these. Or I don't know about converting one of the garages into an ADU or something like that, but maybe there's some possibilities there. All that is upside. We really hope that this property makes sense on the current basis, but the price of $436 a door, I mean, I don't blame them for their asking price, but from buying it, I can just tell you $400 a door is probably where I'd want to be on it. 3.2. That's probably where I'd want to be if there isn't a bunch of unknowns or surprises. So if it's older wiring and you got to upgrade that for insurance, then that would affect my numbers. If the interiors are really smashed and they all need to be demoed out, then that might affect things if rates go up higher. I think those are all moving, the rates and insurance. I mean, those are things that are going to be big on any property, but especially going into something in the 50s. So insurance is going to be a big one, but this is really, really good real estate. So I am definitely going to present this to the owner. You can see the rents are way, way low. If you look at the current column here, your in place is $13,725. So your blended rents are $1,715 a month, and then stabilized we got $22.95. I think we could obtain that, and you might even be surprised. You might even get more than that, just depending on how these units flow and the look of them. So $18,360. Let's just take out 3% vacancy, right? Let's annualize that number. Here, let me do it on the calculator so you guys can see. Bear with me. All right. Move this over. Usually just used to doing this on the phone. But okay, so 18,360. Let's see what the stabilized cap rate would be on this. Times 12. Okay, so $220,320 in top line gross income, not including any other income, just straight off the rent roll. If we believe that we can get $22.95, I think we can. Let's take out 3% vacancy and then take out 35% expenses. We're going to get to an NOI of 138,911 is what percent? Let's do it at the 3.2. That'd be a 4.3 cap rate. So you're stabilizing well below the cost of debt. This is why putting debt on right now is so challenging to see long term how does this play out, because you have to believe or take the risk that the interest rates are either going to go down, right? And there's no guarantee of that, but you would think they might soften down a little bit to where you could refinance, or you're going to have to put a big chunk down and then plan to just pay off the loan. It's really the only way to make this work, unless you were to acquire this asset with a bridge loan, fix it up, and then put it on the market and sell it. We've seen syndicators actually active in this market with doing that, which is interesting. And then some of these long-term holders are having a hard time figuring out how to make these deals work, which is why you can't buy at a 4.75 cap or a 4.34 cap with a 6.8% interest rate and, you know, model that out for 5 years. It's not going to look too good. But this is an asset where if you're buying quality, you're buying good real estate, you're going to be safe here. You just got to figure out, depending on your down payment and your lending relationships, if you can make that work. But the real estate definitely works. All right, so moving on. So we got those three that I really, really like. Let's go back to LoopNet really quick. Okay, so I'm gonna jump in. There's actually, where's this one in Stanton? Here's one that I'm gonna go over really quickly that I like a lot, and it's a listing that we have. This is 7 units on Green Avenue in Los Alamitos. The Los Alamitos market is really, really strong. It's kind of like a coastal market where the prices are really high, the rents are really high, but you're getting a little bit of discount from being at the coast. You know, it's a little bit cheaper than Huntington Beach, but not really. But a little bit. So you're getting a little bit more value. You're getting good product too. I mean, this is 80s product, a great unit mix, 88 product. So people that are worried about getting insurance, you might have a better time getting insurance with an 80s vintage asset. It's got a great unit mix of 2-bedroom and 3-bedroom units, some of which are townhouses, corner lot. I mean, this is a really, really good asset right here. Big units. And then if you look here at the back of the property, you could possibly look into ADUing these 3 garages and creating a unit there. You got good quality surface parking, the amount of surface parking here, and you got the 4 garages detached, and you have street parking. So that might be the first thing I'd look at, is an ADU option on this property. What I like about it is the price per units for this type of property are like 500,000 plus. So if the cost to do an ADU is going to be more or less fixed for a garage conversion, if you do it in Los Al where the price per units are 500 plus, or you do it in Anaheim where the price per units 250. So you want to do it in these markets if you can, because it's the same level of cost and you get a better lift and appreciation and possibly rent. You got pitch tile roofs. This is something I really, really like the product. And then also, let me pull up the OM on this one. So I've already got it cleaned up. Loop net's good, but the packages are where it's at. All right, bear with me. We do have an offer on this property, so I think it's going to be going in escrow pretty soon here. But let's dive in, okay? We already went through a lot of this. But what I like about it is it's also got an assumable loan. So let's scroll down to the numbers page. Us brokers like to put them at the very end of the packages so everybody can see the pretty pictures beforehand. But here we go. Okay, so the asking price is $3,950,000, $564,000 a unit, $513 a foot, 3.5 cap going in. But you've got a nice cap rate stabilized at over a 5. And look down here, you've got an existing Chase loan, this little highlight here, of $1,350,000, assumable Chase loan, 4.36%, fixed through June of 2027. So you got a path to positive leverage on this. You got to put about 65, 66% down, but you're getting a loan where you can get a positive leverage once you can get some of these rents up. So I really like this to get 80s product, good location, corner lot, well parked, good unit mix. This is quality asset and an assumable loan. This is probably going to sell pretty soon. All right, hopefully this is a value. Again, this is just a pre-screen of some assets that we like. Here's another one that's on the market that's listed with Cushman & Wakefield. We've got the package on it that was sent to us by the listing agent. This is 11 units in Stanton on 2nd Street. This is, I believe, the first time this property's been on the market. I believe the owner built the property. It's also, as you can see, available with the 8 units across the street. It can be sold separately or together. It makes a lot of sense to do both of them at one, but for the illustrations of this video, we're just gonna look at the 11 units. I walked them both. I liked 11 better if I had to pick one. You get why? Because you get a little bit more parking over here on this one versus the other one. You have no surface parking, just garages. And then you get more units. So diving in, you got 71 built, which is nice. Half acre of land, 11 units. Stanton is a good bread and butter market. Skip over some of the location stuff. 2-story stucco tile roof. See if we can get some aerials here. It's older vintage. You got those stairs. I'm not crazy about that. The decks are going to be a thing that's going to be a concerning on this with the new deck law that's coming out in 2025. But you don't have any subterranean parking or anything like that. You got on-grade parking. Let's see. Okay. Built in 71, 11 units, 2-story, consists of 1-bedroom and 2-bedroom units. Let's see if we can get an update here. Okay, here's the building. It looks good from the street. You can make this look nice with some paint and some new windows. It'll go a long way. You got the comps in here. Again, the numbers page is at the bottom. Do you guys notice the trend there with that? All right, so here's the property. You do have some tuck under, which is not ideal. Tuck under means you've got parking under livable square footage. So that wasn't a requirement in Orange County to have it retrofitted, but some of the banks are a little skittish with some of that. Some of those lenders just won't lend on it if there's a certain percentage of tuck under. So that's a negative. But again, no property is perfect, right? Okay, so you've got 9 1-bedroom, 1-bath units. And look at these rents. This is not a typo, I confirmed. So $731 is the average unit rent. I think this is the first time I've ever seen rents that low, ever, in a building. And your 2 bedrooms, $1,050. Okay, so you're stuck on paying cash for this or getting a bridge loan. I don't even think you can conventionally go to a bank, go to Chase, and get any loan whatsoever. Really, it's not even worth it. And you're stuck in a prepay. It's a small loan. It's not even worth the paperwork. But you got a big upside. So let's take a look at the asking price. Only reason why we're going to look at this deal is because it's got to be a good basis because of those rents are so low. So $2,805,000, $255,000 a door. Now we did look at Roberts, where the asking price is $234,000 a unit, all ones, and there might be some flex on that. You don't know, and there might be some flex on this one, $255,000 a door. I don't know if they'll get this price. I think that might be a little bit of a challenge. It's tough to look at spending money fixing up an asset. It's the same turn costs here as it is just about anywhere else, and then you've got some things you can't control on the street, right? For those reasons, it's a turnoff, right? You can't fix the location. So I think that's the issue with this property, but I think fundamentally the asset's going to perform well. You've got units on this street on Second, you got units on First, 1 block away, and people typically that own those units, they don't sell. They like owning there. They perform well. They're not selling them there. That's a good sign. People hold assets. That's a good sign. So I think this one is desirable for that 70s product. It might go at a good basis. I still would look at it, even though you've got some challenges with the street on Beach on the corner there. This could be a good one. I still think could work. Now, if our client says, look, we don't want to deal with that, we want good locations and we don't want to deal with any riffraff, then we're going to eliminate some of the properties and then focus on the better locations. But they're like, you know what, I'm open to yield. If we can get this at a right price, let's do it. So it all depends on the conversation we have with the client. But here's the property, and it shows well once you get to the property. So those are the assets. There's one left. I got one more building that came up. This one's not on LoopNet, but it's on the MLS. And what I like about it is it's 16 units in Garden Grove on El Rey, and this thing's been in and out of escrow, and the price has been softening. So the newest price the owner will deliver is $3,850,000. They started out in the 4s. It's sat on the market. It's blown out escrow a couple different times for some buyers that have just kind of backed out for one reason or another. But I like this deal. At a certain price, this is going to be a good asset. I've been tracking this one. So what I like about it, you can't really see it from here, but let me pull up. I should have been doing this all along. Sorry, guys. But let me pull this. So we got access to Land Vision. We're going to type in the address here. This is off Harbor. You got the Red Lobster right here behind it. This is the subject property that I clicked on, and then I clicked on here. We'll block out the ownership information, but it pulls everything up. It pulls up the owner information, who owns it, when they bought it, some property characteristics, and then we've got the Great Wolf Lodge up here off of Harbor. So it's a decent little pocket. When you come into this area, this is the cross streets are Garden Grove Boulevard and Palm over by the hospital here, Garden Grove, the hospital. And then when you go in Palm, you've got some single family homes, which is great. They're not all like super well kept up and everything, so it's a little bit of a deterrent. Unfortunately, you've got one of our good relationships within the market owns the sister property down the street. We've checked in with them to see how the asset's performing. They're doing well, they're getting great rents, so we already have a proven out comp on the street. Let's pop this into Google. So again, this is the subject property. This is the Palm Harbor Apartments, 12365 El Rey. You got the Red Lobster back over here. You kind of got some areas where there might be some homeless or people popping in and around, transients. Not ideal. No property's perfect. You've got the property here. These are all tandem 2-car spaces. I walked it before. This slurry is all messed up, so this is something that we would need to price in to redo the slurry. Now, one of the things that the owner has done is 8 out of the 16 units, he renovated. He went in and renovated. He supplied pictures on MLS and also shot me over a few more. I like the fact that half of them are renovated. And he's also just put on a new roof. So those are things that's CapEx that's already gone in that's going to save a buyer money. Now, if you turn around, you kind of can see some of the homes in the area, which is great. It's great to be around single-family homes. You got a new build right here, so that's nice. And then check out the sister property. Our friends bought this a few years back and renovated the property. Look how beautiful that is. Landscaping's done, windows. They got this building too. So we've already got a proven out comp on the street. I believe they're getting 2,100 plus in their 1-bedrooms, okay, on this sister property. So we go back over to the subject property. Let's kind of cruise over Google here real quick. All right, cool. You can kind of roll in. It's got the older stairs. The railings probably need to be updated, but we would have to double check. This is before the roof was put on. You can see here May of 2022, but the building looks just about the same. So let's dive in on some of the numbers and then we'll call it a day. So the price is $3,850,000, $240,000 a door. However, if I had to pick a market, I like Garden Grove a little bit better than the location on Robertson, Anaheim. And then also 8 of these are renovated. I don't know the condition and quality of the units at Roberts, but if the rents are that low, then maybe they're a little tired and original. You never know. We'd have to dig a little deeper, which is we'll do once we find out what direction our buyer wants to go with. But I like that the roof's done on this property. It's just been put on. Let's update this to 6.8%. We got a better cap rate going in here too. So we can actually get a loan on this property. We've got a 4.3 cap on this property. Maybe our underwriting's a little differently. We might have skinny down some expenses already, but like management. But overall, you can see here, some of these things are estimated. We haven't verified yet with the seller. But we're dealing with a 13.5 GRM, which it's better than most, and an over 4.3 cap on the number. Now, where would this make sense? I think right around 3.6 million. $225 a door, 475 cap, and we plugged it in at 1,800. We can go back and type in, oops. Let's go to 19. Let's level it off and compare apples to apples within the Roberts property. Plus, we know a sister property down the street on El Rey is getting 2,100 plus. So we're getting close to that 7 cap stabilized. I like this property better. I think this one is interesting. I'm not in love with the open parking. I'm not in love with the fact that it kind of backs up next to some commercial and maybe you might have some issues there with that. But from a perspective of the units in Garden Grove they perform typically pretty well. If you could get it at 3.6 million and half the units are already renovated and the roof's done, this is definitely something that I would look at. Now, it doesn't mean that every property that I think's decent is going to go to the same, every buyer's got different criteria. So this is something that I think a buyer should buy. We're probably going to share this with our exchange buyer first, of course, but if they don't like it, we're going to make sure that we get it in hands of our investor database. So overall, hopefully this was of value. Again, I just want to show kind of how I cruise through looking at assets. If we like what we see and it passed our little sniff test, then we'll make sure we present them to a client and then put eyes on the asset, deeply underwrite them, size them up with firmed up debt quotes, and then sit down together with our client to see about making an offer and where it makes sense. So if you're looking to buy an apartment building or you just want to talk about maybe trading up or underwriting assets, let us know. I'm here and happy to help. Thanks so much for watching, and we'll see you on the next video.